Assalamu alaikum dears, and greetings to all of you. Welcome dears to this video. I would be delighted to introduce an informative and quick session in this channel, which focuses on Islamic finance insights. Please support us by subscribing and following upcoming videos. So, let's start our session. Islamic financial markets. In general, financial markets are those where various types of securities are traded. They are of various types, including, but not restricted to, the markets for foreign exchange, money, stocks, and bonds. Financial markets are vital to the smooth operation of a capitalist society. Financial markets enable banks to borrow money and help them give loans to people wishing to borrow for various purposes. Islamic countries do need and have financial markets. These markets, like others, observe juridical norms and restrictions. They shun transactions involving interest, gharar, speculation, and other impermissible elements. They operate on participatory principles. Islamic financial markets are a growing segment of the global financial system. They are based on the principles of Islamic law, which prohibits interest riba, gambling maysir, and uncertainty gharar. As a result, Islamic financial products and services are structured differently from their conventional counterparts. The Islamic financial markets are made up of three main segments. Sukuk. Sukuk are Islamic bonds that are backed by assets. They are similar to conventional bonds, but they do not pay interest. Instead, Sukuk investors receive a share of the profits generated by the underlying assets. Islamic banking. Islamic banks offer a range of financial products and services that are compliant with Islamic law. These products include savings accounts, current accounts, loans, and mortgages. Islamic insurance. Islamic insurance, also known as takaful, is based on the principle of mutuality. Under takaful, policyholders contribute to a pool of funds that is used to pay for the losses of those who have suffered a misfortune. The Islamic financial markets are growing rapidly. The size of the global Islamic finance industry is estimated to be more than 4 trillion. This growth is being driven by a number of factors, including 1. The increasing wealth of Muslim populations around the world. 2. The growing demand for ethical and socially responsible investment products. 3. The increasing regulatory support for Islamic finance in many countries. The Islamic financial markets offer a number of advantages over conventional financial markets. These advantages include reduced risk. Islamic financial products are structured to minimize risk. For example, sukuk are backed by assets, which means that investors are not exposed to default risk. Greater transparency. Islamic financial products are more transparent than their conventional counterparts. This is because they are based on clear and well-defined principles. Socially responsible. Islamic financial products are socially responsible. They do not involve interest or gambling, which are considered to be harmful activities in Islam. The Islamic financial markets are a growing and dynamic sector of the global financial system. They offer a number of advantages over conventional financial markets, and they are becoming increasingly popular with investors and businesses around the world. Here are the latest trends in Islamic financial markets in 2023. The growth of Islamic fintech. Islamic fintech is being driven by the increasing demand for Islamic financial products and services, as well as the growing availability of technology. Islamic fintech companies are developing innovative ways to provide Islamic finance, such as online banking, mobile payments, and peer-to-peer lending. The expansion of Islamic finance into new markets. Islamic finance is expanding into new markets, such as Europe, the United States, and China. This is being driven by the increasing demand for ethical and socially responsible investment products in these markets. Islamic financial institutions are setting up branches and subsidiaries in these markets, and they are also partnering with local financial institutions. The development of new Islamic financial products. There is a growing demand for new Islamic financial products, such as Islamic funds, Islamic sukuk, and Islamic insurance. These products are being developed to meet the needs of investors and businesses in different markets. For example, Islamic funds are being developed to invest in halal ethically permissible assets, such as Islamic bonds and stocks. Islamic sukuk are being developed to finance sustainable projects, such as renewable energy and green infrastructure. Islamic insurance is being developed to provide coverage for risks that are not covered by conventional insurance, such as death caused by natural disasters. Islamic sukuk are being developed to finance sustainable projects, such as renewable energy and green infrastructure. Islamic insurance is being developed to provide coverage for risks that are not covered by conventional insurance, such as death caused by natural disasters. The increasing focus on sustainability. Islamic finance is increasingly focused on sustainability. This is because Islamic law prohibits activities that harm the environment. As a result, Islamic financial institutions are developing products and services that support sustainable development. For example, Islamic banks are offering green loans to businesses that are working to reduce their environmental impact. Islamic investment funds are investing in sustainable projects, such as renewable energy and green infrastructure. These are just some of the latest trends in Islamic financial markets. The industry is constantly evolving, and it is expected to continue to grow in the years to come. Here are some more trends that are expected to shape the Islamic financial markets in the coming years. The rise of digital Islamic finance. The use of technology in Islamic finance is expected to continue to grow. This is being driven by the increasing demand for convenient and accessible Islamic financial products and services. Digital Islamic finance platforms are being developed to offer a wide range of products and services, such as online banking, mobile payments, and peer-to-peer lending. The growth of Islamic microfinance. Islamic microfinance is a type of financial services that provides small loans to low-income individuals and businesses. It is expected to grow in the coming years, as it can help to reduce poverty and promote economic development. The development of Islamic ESG investing. Islamic ESG investing is a type of investment that takes into account environmental, social, and governance factors. It is expected to grow in the coming years, as investors become more interested in investing in sustainable businesses. The increasing collaboration between Islamic and conventional financial institutions. Islamic and conventional financial institutions are increasingly collaborating to develop new products and services. This is being driven by the growing demand for Islamic financial products and services in conventional markets. The standardization of Islamic financial products and services. The Islamic financial industry is working to standardize its products and services. This is being done to make it easier for investors and businesses to understand and use Islamic financial products and services. These are expected to shape the Islamic financial markets in the coming years. The industry is constantly evolving, and it is expected to continue to grow in the years to come. In this point, we reach to the end of today's session. I hope that this video provided an informative and quick session. If you are interested in this area, kindly subscribe in the channel because we are planning to provide deep information as well as the latest reports and news about Islamic finance. We look forward to your subscribing, your like, as well as your suggestions in the comments. Have a good time and best regards.